Financial markets can be a scary place, and they don't rest for anybody. Our goal here at A1 Trading is to bring you coverage every day so you can stay up to speed on the latest market moves. Before the show begins, remember that trading involves risk, and anything shared in our content should not be construed as financial advice.
I do have some trades on. I am long Aussie CAD.
For these positions, I wouldn't mind holding them for 3 months.
So around 100.5 to 99.5 in that sort of area.
Pulver alerts, I have 100 shares at 11.79. I closed it out today.
Start building your strategy based upon historical data.
Welcome to A1 Trading.
All right. Good morning, everyone. Welcome back to another live stream, and happy Monday to you. I hope you're doing well. It is a rainy morning here in Atlanta. Hopefully it's nicer weather where you are. Good to see we got a good crowd here already tuned in. Hope you're doing well. Had a busy weekend, did a little bit of travel, but I am back in the office, back at the desk, and things are ripping. New week, but not so new market moves. We still see stock indices higher here today, which we are talking higher. The Nasdaq's up 1.25% to start out the week. That's following what was already a monster move from those sell-off lows that we saw a few Fridays ago. Really strong push here out of the indices. We've got the Dow Jones up 0.5%. The S&P 500 is up 0.8%. The Russell is up 1% this morning. And even international stocks holding up pretty well. You've got the FTSE up 0.27. The Japanese stock market's up 1.8. The Chinese stock market is up here. We are seeing a bit of a melt up to the upside here. And of course, gold and silver down, which makes sense. Why is everything making moves? Why is the VIX lower? Why are stock indices higher? Why is gold down? Well, it's because we have what seems to be a deal between the US and China. And so the markets are absolutely cheering this. It looks like the terrifying tariffs that everybody was so worked up about and fearful of are not going to happen. It turns out the US and China look like they're going to make a deal. And we have President Xi, President Trump meeting this week. Their teams in Malaysia met up. Things went swimmingly. Things look good. The market is cheering it. So we have a market that's in runaway mode. I mean, if you pull up your moving averages, take a look at this. You've got a stock market that just won't quit. You have the AI story. You have rate cuts. You have trade deals taking place that, the markets was worried about, no longer has that to worry about as much. I mean, this is a market where it is hard to be a bear. It's hard to be a bear. Now, the biggest bear case that I would say you have is the idea that there's not really great reasons here, at least in the eyes of the market, to be a bear. Now, you might be super contrarian and say, I'm out of this market. I'm getting out of the way. I think it's going to topple over. Fair enough. If you are just being contrarian and saying, hey, I'm going to take some profits, I'm going to get out of here if I've been long, and I'm going to wait for lower prices. Please understand, there's nothing wrong with taking profits, but I would say that being a bear in this market is incredibly, incredibly challenging because you've got a roaring upward trend. Fighting this is difficult. Bro, are we buying or selling gold? What are you chatting about? Jeff, my friend, let me just say this. If you're looking for somebody to tell you like, hey, should I buy gold or sell gold? Something went terribly wrong. Because if you're just tuning into streams like, hey, am I selling this? Am I buying this? There's no strategy there. You're just looking for someone else to tell you what to do with gold. Nobody knows. You can browse all over social media. You can go to the smartest people in the whole world, in the trading world. Nobody knows with certainty what gold's going to do next. If you have a strategy that you've back tested for, 5 years worth of data, you have a system, you have a strategy that you've thoroughly tested, and you say, when the market does this exact setup, it tends to give me these returns over 1,000 trades. That's taking this as not a gamble, but as a statistical backed approach to the financial markets. But jumping into someone's stream, hey, what are you talking about? Are we buying or selling gold? I wish you the best, my friend, and I hope that you find success in the markets. But that line of thinking I've never seen work for anyone. So please be careful with that. Good morning, Nick. New trader here. Do you suggest building up more capital first if your strategies invalidation points for stops tend to be beyond what you are willing to risk per trade? Yes. So like your question is, if you have a strategy where you're like, let's just say you're long gold and your stop loss makes sense to go here, but that distance, even on minimal lot size or minimal contract size, whatever you're trading, share size, whatever you're trading, if that is simply too big for your account, then I would say you probably should not trade that particular asset. Like a lot of traders who trade XAU USD, specifically that product, because gold has many ways you can trade it. You can trade gold futures, GLD, you can trade XAU USD on a CFD brokerage. You have all these options, right? CFDs on gold, I really think, this is my personal opinion, I think you have to have at least like 10K in an account, especially if you're going to swing trade. Like if you're going to swing trade where you have a decent sized stop loss, it's going to be hard to like create a small risk per trade setup if you're trading on a $500 account on gold. So my opinion would be, yes, you probably need more capital. Stick to a demo account until you have that, or trade something else. something that's more capital efficient on CFD brokerages or Forex brokerages would be like currency pairs, like low vol currency pairs, euro dollar, the Australian dollar, Kiwi dollar, euro pound, things like that. See you, Jeff. I'll miss you, my friend. Best of luck in your trading, genuinely. But it's hard out there. For people who are just tuning in, Jeff asked earlier, like, what are we doing? Buying and selling gold? What are you chatting about? And again, I would just encourage, I mean, no disrespect, Jeff, but I've never seen someone do well in markets with that mentality. So I hope that you give some more respect to the markets, and I wish you the best in your journey. Trading's hard, man. Like, here's the thing, right? For the last 5 years, I've been streaming on YouTube since 2018. So that's 7 years. Like I'm coming up on 7 years streaming almost every day, talking about what I'm doing in markets. If you had showed up every day and just tried to copy what I'm doing, that does not even guarantee that you would have made money, because there's so much more to it than profitable trading than direction, right? People obsess over direction. When do I buy? When do I sell? But there's more to it, because if you blind copied me, which I don't encourage anyone to do, if you blind copied someone, right, who actually is a profitable trader, you can still mess it up. Your position sizing could be too big so that a losing streak blows you up. Your mentality could be in the wrong spot where you give up on a system because it's not working this week. There's so much more to profitable trading than simply direction. Do I buy, sell, or do I buy or sell gold, right? Like genuinely, I mean that, Jeff. I'm not coming at you, my friend. Like I promise, I'm not trying to just like bash you or make you feel bad. I hope that you'll think about it a little bit more. Like I was there too. So I'm not saying like, you're a dummy and like get out of here. That's not what I'm saying. What I'm saying is like trading is way harder than I ever thought it was going to be when I first started. And when I first started, I might have thought the same way. Like, hey, is gold going to go up this week or down this week? But fundamentally, the understanding of markets that I have now tells me like direction is just one piece of it. Trade size, entry spot, exit stop, exit stops. How are you going to handle the winning trade? How are you going to like, there's so much to think about that goes beyond simply, do I buy or do I sell? Would you agree that this month is bad? Every month is good or bad, depending on what your style is. For me, this is probably one of my best months of the year, because I'm a trend follower and the Nasdaq is up, and I bought the dip on that sell off. So I'm having a really good month, but not every month is good, right? So far this year has been, I think, in terms of a relative performance to the passive benchmark, this has been my best trading year. I think my portfolio, I checked this morning, I'm up 30% year to date, and I think the S&P 500 is up 15%. So I'm pretty happy with that. Now, granted, shoulda, coulda, woulda, I should have just put my whole portfolio in gold, because that was up 60% at one point. But you can always kind of play that game. See what I mean? Like, you can always play like hindsight. I should have been just leveraged in the NASDAQ the last 5 years. I should have been long gold for the last 2 months. But don't do that to yourself, right? Trading systems and strategies, there's always going to be something that you should have done or could have done that would have done better. But that doesn't help you, right? Like, what are we doing to the right side of the chart, not to the left side, right? What are we doing from here matters. And so for me, what I'm doing here, I'll start sharing some of my actual thoughts here. NASDAQ broke out. I'm already long. I'm planning to, again, with this gap up here, I mean, we are in runaway mode. You have a number of reasons why. My opinion is, I don't have a willingness to short gold, but I think gold has some room to keep coming down. We are coming off euphoric run-ups in gold, and I think the NASDAQ has room to keep going. I mean, let's just think about some of these catalysts here, right? Again, I'm going to explain something in just a second, but we have rate cuts coming. We have strong earnings for stocks. We have a deal between US, China. We have momentum. Momentum plus, I'll just make another line for this, end of year seasonality. You don't fight this, in my opinion. Again, you do what you want, stick to your system, whatever it is, but straight up, this list is not one I'm fighting. We have rate cuts. That is straight up liquidity into the stock market. Strong earnings. Corporate earnings are on fire right now. On average, stocks are putting up really impressive earnings and forward projections for their earnings in the future. We have a deal between the US and China. That was a huge fear for the market that just got washed away. You have momentum to the upside. I mean, this chart looks gorgeous. It is just like, look how resilient it was. Every time you get dips, buyers just step in. It's shockingly strong. End of year seasonality is also a force I just will not fight. So if you ask me, is the NASDAQ too high here? No, it can keep going. Do I buy it here? Nah. I think the buy entry, I'm a little bit, obviously biased here, but I bought the NASDAQ over here because, again, I was waiting for that dip. We finally got it, and I've been trailing stops. I don't know that the NASDAQ's going higher, but my list of reasons tells me path of least resistance is for it to keep going. But I want to manage my risk because I could be wrong. Like, something could come out. Like, let's say Trump and Xi this week, let's say something disastrous happens. It's not likely, but it could happen. And so I want to be prepped. If the market rolls over and cannot hold levels of support, I need to get out of there. So I'm gonna trail this stop loss today. I'm going to move my stop on the NAS higher. I also have Russell longs. So I'm very, very positioned in the stock market on the long side. But my plan is on the trading side is to manage my risk by trimming or trailing, my stop loss further into profit, right? So let's take a look at this. I know there's a lot of traders in here who pay attention to gold, right? What does this list tell us about gold? Rate cuts, that's good for gold. Strong earnings, not great for gold. It's not a major negative, but it's not good for gold, right? Strong earnings are emblematic of a strong economy. Strong economy, strong dollar, not particularly great for gold. US and China having a deal, very bad for gold. Why? Gold loves chaos. Gold wants to see uncertainty prevail. The US and China shaking hands, or two presidents meeting up, shaking hands, that's not good for gold. Momentum has also worked against gold now. It seems like we're losing some of that momentum, though I wouldn't say we've completely reversed the trend. We're not in a bear trend in gold, at least in my view. And end of year seasonality works against gold. So again, I recognize there's a lot of gold traders in the room. Gold looks mixed for me. Again, you may have a different approach, different strategy, but if I'm looking from the kind of key components that we look at here on the show, gold looks mixed. I mean, I think we have room. I think it's very, very possible that you get some further consolidation and pullback in gold for the rest of this year. Like you could have gold come down and test that 618% retracement. We could tap back into the threes, cool off a little bit here. And maybe in 2026, we come roaring back. That, to me, that's like the most likely scenario. Now, if I think gold could consolidate or come down, does that mean I short gold? Well, for that, I'm going to check. Well, first of all, daily chart says no, right? Daily chart's still strong. Like you're talking about 20-day moving average holding up decently well. 50-day moving average is still a ways away. This has so much momentum in it from this year. I'm not shorting gold, but let's look at what the Edge Finder has to say about gold at this time. Gold has a -1 score. So it sort of accurately reflects what I already just got done discussing. Gold is mixed for me. So I just have no trade on gold. I will continue to comment on it and watch it and share updates with you guys on the channel. But I don't have any reason to say like, oh, yep, this is a buy right here, stops below, let's go higher. I can't say that, right? My system is really straightforward in the sense that gold is getting a neutral bias on the Edge Finder. The technicals, again, on the higher time frames, still look constructive. The 4-hour chart, though, starting to get threatened, and the 1-hour time frame straight up looks like we've lost that momentum. Double top, broke support, right? Moving average is starting to furl over. If I'm just looking at the 1-hour chart, my bias would be if this level breaks, we're probably headed to 39.50. So yeah. Is it harder psychologically to go short? It's not even psychological. It's just straight up like, this is just not a chart I like to short. Because same thing with the NASDAQ. It's a really fickle trade to try and bet against things that over long stretches of time tend to go up. Because there's always sort of that, like, as the chart drops, the longer term investors and buyers of these things who have been waiting on the sidelines for the dips, like they're always around the corner. Like the further something that has long-term appreciation drops, the more willing I think longer term investors are to buy the dip, unless you get into like a straight up, disastrous bear market. Then people kind of lose the faith of buying the dip. But right now, you're looking at NASDAQ, you're looking at gold. I'd say dip buyers are a dangerous thing to try and fight. Like if you're looking at gold and you're like, yeah, this is going way down. I mean, maybe you have your reason. I would just say risk accordingly, in my opinion. Like if you're going to get super short on gold, I'm not going to do that. Not to say like, oh, you're foolish for doing it. I'm just saying like it's a hard trade. It is a hard trade to short gold. Especially when, again, the long-term trend is still very, very strong. So shorting that environment, I think you're playing with fire. Because when I say that, like, okay, let's say you do catch this little short here, but maybe that's it. Momentum just picks right back up and gold bulls are back in the picture. I'm long-term sort of always a bull on gold. So yes, psychologically, it is difficult for me to short gold because I like precious metals as a long-term investment area, and I have for years. So I haven't really shorted gold in the last few years. I can't even remember the last time I took a short position on gold. Actually, I can, and it was in 2023, and I was dead wrong, but reversed it and got bullish. So I was in 2023, I was short this move in gold and ended up taking like a break even or a really small profit on this. And then the gold market just ripped and ripped and ripped. And from that point, I pretty much started getting bullish. Once inflation started cooling and it was evident that the Fed was going to start, changing from a hiking cycle to a hold or even a cutting cycle, as soon as that shift started to become apparent in the fundamentals, gold was top of mind, bullish, and still is. Again, I don't think like right now is the time for me to buy gold. It's not in my system. But if there's a bigger dip and let's say macro starts to materially worsen for the US economy, I am back in the bull camp. Hi, Nick. I think we should consolidate for like 4 months from now. So I'll keep selling premium on gold, iron condors, etc. Bulent, I like it, man. Yeah, I mean, you can also, if you trade Bulent, do you trade futures options or do you trade like GLD options? I'm just curious. But yeah, I mean, I think that if you ask me like, where do you think gold is going in the next few months? If I had to give an answer, sideways. I don't see a strong bearish catalyst, and I don't see a strong bullish catalyst. So that's my thought process on it. Taking a look at the top setups for the week here. Chinese stocks popped in here. I thought this was interesting. Bitcoin also getting a bullish reading. I'm going to be watching both of these. I'm also watching oil longs. I'm already long the NASDAQ, and I'm already long the Russell. So I'm probably not going to add more to my US indices positions as I'm pretty heavily there already. But let's see if we are looking at Chinese stocks just for the sake of it. Chinese stocks looking really strong. If you were to get a pullback or a dip here, potentially I'm looking at that. I mentioned also Bitcoin here. Let's take a look at Bitcoin here this morning. Bitcoin, I got stopped out of this one. A little bit frustrating because I went long Bitcoin and I was right in the idea, but I was wrong in the timing. Also known as I was wrong. So I went long Bitcoin right around here with a stop below this area, got stopped out. I was exit liquidity, as they call it. And then we reversed. So I was out. I was wrong about that idea in terms of timing. Was I right in the idea that gold, with Bitcoin could go up? Yes, but it doesn't matter. Sometimes you'll hear people say like, "Oh, I was right. I knew gold or Bitcoin or whatever is going to go that direction. I got stopped out too quick." Well, to me, a better mindset is just to say, "Oh, I was just wrong. I was just wrong in the timing," and that means you're wrong. There's a saying in financial markets where if you're early, you're wrong. Any update on the U.S. shutdown? Not that I've seen. Nothing just yet. Since I'm from Turkey, I'm trading CFDs, also trading on Interactive Brokers with my options account. Bulent, awesome. Yeah. Interactive Brokers is pretty popular option for traders all over who want to access options outside of the US. Quick analysis on Coca-Cola. I can't really give you too much on that without derailing the stream, just because again, I'd have to get into like the financials, and I don't want to take 10 minutes out of the stream to do that. But generally speaking, consumer staples as a whole, I think are an okay area in my personal opinion, not financial advice. Consumer staples as a group, like let's say XLP, Coca-Cola, things like that, are not a terrible place if you are a little bit worried about stock market valuations. I mean, that's a fair thing. Stock market's just gone straight up for years on end. That won't go on forever. And so companies that have more stable incomes, more consistent growth, but not a lot of growth, can be a place to hide out. So the Dow Jones, Coca-Cola, staples, consumer staples are companies that have low growth, but very consistent profits and very consistent revenue growth as it is. They're not cheap either, though. Even at these levels, XLP, consumer staples are not cheap, but they are sort of expensive because they're so consistent. But everything in the market is expensive right now. You are talking about like it's a challenging environment to invest, in my personal opinion, and I'm not doing a lot of equities investing at this time. Do I trade? Absolutely. But in terms of like, am I buying the NASDAQ for the long term at these levels? No. Personally, no. I think being more nimble, trailing stops, being willing to to trail out if something comes along. If the AI trade breaks down, I don't want to just hold the bag, right? I want to, if you give me a 15, 20% pullback in the stock market, am I going to start buying stocks for the long term again? Yes, I always do. Anytime you give me 15+% drawdown in the stock market, I am buying stocks for the long term every time. Not saying that that's the bottom, but willingness to buy. But at these levels, I'm not buying and holding stocks aggressively. Not to say that's the worst, like a long term, like 10+ years, you probably do fine. But right now, are you getting peak bang for your buck in stocks? I would argue no. From a trading perspective, momentum rolls on. But where that momentum ends, I don't know. Let's take a look at this oil idea. Oil bullish on the Edge Finder. I've been watching oil a little bit. Haven't checked on it. Let's see. Oil prices sitting at resistance. I marked this chart up last week for a possible breakout move. I am looking, like I said, for bullish setups. If we can break to the upside here, 62 looks interesting. Something like this, I'm interested in. I don't have a trade on in oil right now. I'm light on energy stocks as well at this time, but would be interested in potentially rejoining the trade. I've tried to get long energy, did not work out through the ETF XLE. Took a loss on XLE when I bought this one, but we did rebound from those lows here. Support seems to be holding. Energy is also an area I'm decently interested in getting long. I guess just because I'm talking sectors here, let me just pull up the stock box for a second, see what's looking good. I'm also long XLY, which is consumer discretionary stocks, which is up here this morning nicely. So consumer discretionary, US stock market opens up in 4 minutes. We'll see what that brings. Macro screener here within the stock box, which, by the way, if you don't have a stock box, oh, look at this, 70% bullish on stocks. This looks good. CPI came in better than expected. If you don't have a stock box, it is free to use this week up until Wednesday. We have a couple days left to our free event, which I should mention. If you want to try out the stock box or the Edge Finder this week, you've got a free chance to do so right now. Join our Telegram channel. There it is. If you use the QR code that you see on the screen right now, or the link that's just been dropped in the live stream chat, you can currently sign up for the Edge Finder free week event. This ends, now we started this last week, so if you're just hearing about it now, do not miss your chance. You've got 3 full days, Monday, Tuesday, Wednesday. You've got until Wednesday to try this thing out. If you've watched my videos, and I should also disclaim, there is no credit card required. We are not charging you for anything. We are making the Edge Finder free to everyone right now until Wednesday. The reason we're doing that is to give people a chance to try it out before we do our big sale of the year. Full transparency, we've got that coming down the pipeline. We wanted to give people a chance to try our tools before we drop that sale. So if that's you, if you're like, I've been thinking about trying it, I've been thinking about getting it someday, do not hesitate. There is your chance. Scan the QR code inside of our Telegram channel. Just click this pinned message to claim your free Edge Finder access this week. Nick, I'm looking into the stock box. All the top stocks are from the US. Is it specific decision? I'm not exactly sure what you're referring to, Max, there, but I'll just go over what this is, and maybe that will help. Basically, top stocks looks at technicals. So it looks at momentum and overextension in stocks. It looks at sentiment. So it looks at what institutions are buying or selling. It also looks at analyst ratings. So what the analyst community has projected for a particular stock as a collective average. So you can see like ServiceNow is an analyst favorite. It's getting a high score there. And then it looks at financials, which are super important. It's sort of like fundamental macro for economies. On a more local basis, that's going to be your financial readings for stocks. So PE ratios, forward PE ratios, price to sales, revenue growth, earnings growth, debt to equity, return on equity, price to free cash flow, dividend yield. The stock box is sort of like the Edge Finder is for gold, silver, NASDAQ, S&P 500 currencies. It is that, except it's for individual stocks. Oh, are these stocks only from the US? For now, yes. Long term, we have a tendency to add more and more stuff to all the tools that we're building because we're constantly trying to make them better. So stay tuned. Probably there will be some international stocks added to the list at some point, but we're still sort of early days. We have two products, the Edgefinder and the Stock Box. Both of them are, there's a lot to these guys. So we are going as fast as we can, but over time, you'll just see them get better. That is kind of, we're always in the workshop improving these things. And just a heads up, Stockbox can also be tried for free this week for a limited time. If you need some information about that, you can also chat with us on our website. Maybe, James, if you don't mind, dropping the link here for people to try it out. If you have any questions, if you want to hear about it, again, genuinely, I think you should take some time the next few days to explore our products for free because we have a big sale dropping. So if you're like, all right, I've wanted these things for a while, take this week as your chance to explore them. We recognize that, our products are not cheap and they'll never be cheap. Our products are quality stuff. We've invested a lot of time, a lot of money, and a lot of effort into building the tools that we offer. They are not cheap because this stuff is truthfully very difficult to build and also not cheap to build and maintain. So they're not cheap, but we recognize people want to try them before they make that purchase. So here is your chance to do so. No credit card, no charge, etc. with it. Okay, so Dow Jones, NASDAQ getting bullish readings here. Part of the reason I'm going to continue to defend my bias bullish on stocks is you have technicals, institutions, both showing bullish signals. We have inflation data that looks good, right? CPI was better than expected. PPI lower than expected. GDP numbers strong out of the US. For now, look, there will be a point where you tune in and you're like, Nick, you were so bullish on stocks and now they dropped. That will happen. It's certain to happen at some point. But right now, all we can do as traders, all we can ever do is look at the facts that we have in front of us, build a bias, and adapt as new facts come in. For now, the Edgefinder deems this thing very bullish. I'm going to remain with the trade that I have on in the NASDAQ. Look at this, US stock market just opened up and we are pushing once again. NASDAQ opened up. Gap has not been filled. Somebody asked me, Nick, do these gaps have to get filled? The answer is no, they do not have to get filled. Will they get filled? Maybe. But please understand, we could have this move before we fill the gap. Or we could just never fill the gap. You could do this and then melt up into end of year, and maybe we fill the gap next year, or maybe we never fill it again. Gaps, there's a gap. There's a notorious, that phrase, like gaps always get filled. Please be careful with that. It's not true. There are many gaps. Well, not many, but there are gaps in the S&P 500's trading history that have never been closed from 2000, 10, 15 years ago. They will almost certainly never be closed. And if they are, the world's falling apart. So, yeah. Thanks, Belent. I appreciate that. Dennis, you're very welcome. Check them out. Again, all I ask is if you're going to take advantage of the free week, genuinely inspect our stuff. We've worked really hard to build the tools that we offer, and I love hearing feedback from you guys. So if you try it out this week and you are like, nah, not really for me, I would still really value your feedback in the form of a comment. I read all the comments on my YouTube channel. Leave me a comment. Let me know, what can we do better? What's missing from the tool? We obviously are a business, so we're trying to build tools that people can't help but buy. They should be helpful. They should be irresistible to traders so that they genuinely are so helpful that people feel they have to buy them. That is the goal with Edgefinder. Edgefinder is awesome. Thank you. I appreciate that. Check the US oil put to call ratio. It's crazy. Yeah, what's going on there? We haven't even looked at some sentiment today. I'm really curious what Friday's sentiment looked like. Put to call ratio. Also, I had a thought here this weekend, guys. Did somebody know something? Because remember, here's a thought on gold, right? When this drop happened, myself and many other creators attested that move to a little bit of euphoria. Trump and President Xi set to meet. But part of me just wonders, did somebody know by that time that we saw this ginormous sell-off in gold, did somebody already know somehow that US-China relations were going very well? Did somebody know something? There's an expression in markets, someone always knows something. It's not a fair game. If you are somebody who, has watched the market for a while, what you'll find out, remember the Bitcoin thing, right? A lot of you guys probably saw that. You had the Bitcoin thing where on this sell-off day, there was a new cryptocurrency account that was created, and it took a gargantuan, I don't know if that's even how you say that word, a ginormous short position minutes before the announcement, minutes before the posts from the president went out. Somebody always knows something, always. And so, sometimes people will blame. They're like, oh, no, it's the president's fault. That's why I lost money. If you just learn to accept that someone always knows something, you're going to be better off. If you blame manipulation, if you blame somebody's post, if you blame external forces, all you're going to be doing your entire trading career is finding the next person or post or thing to blame. Do you know what we do control as traders? We control our position size. We control our risk. Those are the things you can control. You can't control that there is always manipulation in markets. And it's not the kind that you think. It's not liquidity grabs. It's not that maybe that stuff goes on, but for the most part, market makers are not chasing your $50 stop loss. Market makers might know something before the rest of us. They might not play a fair game, but we as traders, individuals, we can't do anything about that. You can complain about it all you want. You can blame Trump. You can blame President Xi. You can thank Trump, whatever, for a good trade, right? That's silly. In my opinion, that doesn't help you. If you want to make money in markets, accept that, sure, there's always going to be freak moves or things that people say or external factors. And if if you're somebody who is blaming too much the market for stopping you out, that's the market. It's not new. Trump didn't introduce, crazy, wild intraday swings. Numerous people throughout history have been that sort of volatile figure. I think we all can agree Donald Trump is super volatile, but he's not the first and he won't be the last person that's going to introduce data that makes the market jump around. And if you're going to constantly blame people for decisions that you're making, you should not be trading. I highly doubt anyone would say, nah, not for me. For the Edge Finder, it's the best tool in the world of Forex, which is full of fake gurus. Thank you for the kind words. I appreciate it. I think that who I would say the Edge Finder is not for, because there are people who it's not necessarily right for. The Edge Finder is not for people who are purely technical traders. Probably not for you. If you're exploring Edge Finder this week, explore the sentiment tools. Explore the seasonality tools, explore the commitment of traders report tools, which unfortunately, I'm sad about this. The commitment of traders data is still delayed due to the government shutdown. But as soon as we have new data, it will be pulled into the commitment of traders data tab. So this data will update as soon as we have it. But currently we are facing the same problem as everyone else, which is the government shutdown has delayed some of our data. Granted, there's still a ton of stuff you can still click through during the free week, and you can still get the idea of what the COT data is doing here in our tools. So you can still explore this during the free week. Put to call ratio. Someone asked me about US oil. Let's take a look at what happened with US oil. Yeah, look at that. Bearish sentiment went off the chart here on USO. So that's interesting. So a lot of bearish sentiment here. Actually, it makes me even more bullish, right? Such crowd sentiment jumping into puts ahead of this past weekend. Maybe some people thought the negotiations were not going to go well. They seem to be going very well so far. Again, I'm looking for US oil breakouts to the upside. Looking for something like this, push to the upside. I'll also share really quick my thoughts on the dollar, and then we're going to pass the stream over to Forex James, who's just tuned in here. Yeah, it looks like we are missing Marco today. I hope he's okay. We haven't heard from him. Running a little late, he said. Our producer says. So we're going to pass the stream over to Forex James in just a second. Last thought process on the dollar: still bullish, just really boring. It hasn't moved very much in the last week. I do still think dollar index has room to continue higher, but truthfully, it's just not really where my focus is right now. I'm still very much bullish the indices. I'm long Russell and NASDAQ pretty heavily at this time. And I think those things just have more clear momentum. Dollar index, like I am modestly bullish in the currency world on the dollar, but just not a lot of like really clear, clean cut currency setups. I've been trading a lot less currencies in recent months and really years. Volatility in currencies isn't what it once was. And I am adaptive in the sense I trade a lot of things. Like I trade currency pairs, I trade commodities, I trade indices. And there are times where I trade a lot of gold. There are times where I trade a lot of currencies. There are times where I trade a lot of indices. Right now, it's indices 101. Stocks and indices, to me, just make a lot more. There's more of a clear setup for me. And what I mean by that is like you can always check. If you ever want to know, like, what am I watching? Just literally go to the top setups page. I prefer the top setups simple page. A lot of our users prefer, we did a survey here last week. A lot of people prefer the full top setups because then they can get a more itemized explanation of what the edge finder's finding. Same thing in the top setup simple, just a little less data at once. So right now, NASDAQ, Dow, DAX indices are just on top. Bitcoin also looks strong. So I'm just going with the risk on for now until something changes. And my plan is to trail stops. For those of you who are inside of our Discord VIP group, I'm going to be trailing the stop loss further into profit here on NASDAQ, locking something in here behind this prior all-time high. We look really good here, but I do want to just kind of cap my risk in case we do get some sort of blow off top here with this breakout. So yeah, in terms of last thing here, just overall setups, currencies wise, I have one trade in the currency world right now, or one idea, which is EuroCAD. Everything else, I'm just going to say neutral. Like Euro Aussie, I can't really give you too much on there because, again, I'm just neutral on it with my system. EuroCAD, however, which is sort of similar, kind of correlated. EuroCAD on the bearish side of things, probably more interested if we were to see a breakthrough support, but something like this would be more interesting to me. All right, guys, we're going to pass over the show here, of course, to Forex James, who is coming on to take a look at some setups with you guys. Before we do that, just a reminder, last chance. We got 2 days after today, so 3 days left to do the Edge Finder free week. You can try out the tool for free until Wednesday. If you want to try it out, all you have to do, join our Telegram channel and click the pinned message. Fill out that form, and it will send you a copy of the Edge Finder, which is free to use up until October 29th. You got a couple days to try it out, 100% free, no payment or credit card required, etc. Literally, you just put your email in, it will send you the tool to play with for the rest of, until Wednesday. There you go. All right, guys, up next, Forex James, stay tuned. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hey guys, happy Monday. Hope everyone's well. Hope you enjoyed your weekends. Can you extend another week on the Edge Finder? Well, they have on the 30th, so in 3 days, there is a huge discount coming for the Edge Finder. I'm fairly sure it would probably apply for the stock box and the Discord and stuff as well, I think. So I would highly suggest saving up your pocket money for the next 3 days and getting that. Cut off. There's really no audio. Or am I being trolled? You can hear me. Ah, shit. Just opened all my settings. Hold on. Cedric, sounds like your problem, not mine. You got me there, though. Denise, yeah, I'm good, thank you. How are you? Sluggy, good to see you. Sweet. Okay, well, I fell for that one, didn't I? Anyway, euro dollar. Looking to probably be a buyer, although, you know, my stance hasn't changed. I'm very, very on the sidelines at the minute, really, with the markets, specifically with the US dollar. As I've said multiple times, I find it very tricky to really build any long-term ideas. So I'm kind of just waiting. Obviously, that's referring to the government shutdown. We've got no labor data coming in. We did have inflation come out on Friday that was higher than previous, but lower than expectations at 3%. But yeah, not really enough for me to start placing positions. What do you think about Trump imposing tariffs on Canada? I don't really think anything of it. I mean, the markets are very clearly risk on today. We saw the markets open, or the stock markets open very nicely. We've got the pound up, yen's taking a hit. We've got silver down as well. So yeah, very clear risk on markets today. So the market clearly isn't taking it as a risk off event. But yeah, my positions currently are in a little bit of a tricky spot. Pound yen is coming up to stops. Why can't I move it? There we go. Pound yen's coming up into some drawdown. Silver's taking a hit. To be honest, I quite like silver taking a hit though, because that is a good thing for me to be able to scale in. New Zealand US dollars coming back down to my entry, so that's fine as well. And I've got a Euro Swiss position open as well, which I haven't added. Hold on. Here. Let me add that. So yeah, Euro Swiss long, which is doing all right. So that's cool. So yeah, position or portfolio overall is slightly down in open P&L, but it's all completely manageable. So euro dollar potential longs, but again, with the dollar, I'm just being very hesitant right now. We've obviously got the Fed that is highly expected to have rate cuts coming. Dot plot, SEP, even Powell, the CME Fed Watch tool, everything is just arrows towards rate cuts. But the market, you know, it's priced in really. But again, how priced in can it be without labor data? Like how many rate cuts, or how strong as the easing cycle? Is that the right way of saying it? Anyway, hopefully you get what I'm saying. PMIs for Europe, and we've also got some fiscal support that's slightly improving. So euro dollar is potentially a long. I still think 1.2 is a my level's gone. I think 1.2 is still a reasonable target to have for the bulls. I've said this previously, but I think if we do get to 1.2, there's going to be some caution, because what we've got to account for, typically you assign a strong currency with a good currency in a good economy. Obviously, if euro dollar reaches 1.2, that means the euro is pretty valuable compared to the US dollar. However, the misconception comes in saying that's a good thing. It's not necessarily a good thing. There's a happy middle ground, because what we have, or the implication of a strong currency, is higher inflation and trade problems, import-export issues. So what we don't want to do is have the euro dollar start rocketing above 1.2. We've already had the ECB verbally speak out. So 1.2 is kind of the cutoff for me. If we do end up getting into a long position, we do see 1.2, I'll be taking profits, maybe even slightly before that, because I think anyone that has been in longs on euro dollar for the past, when did this start? Was it May? February. So since back in February, I think 1.2 will kind of be like the target to start taking some profits off the table. Obviously, I don't know that for a fact. That's just my sort of trader's instinct, my thought process. Could be completely wrong. EuroCAD, I was looking at this last week. However, I'm not overly interested right now, to be honest. It was on the Edge Finder. It still is on the Edge Finder. However, Last week, I think it was -8 or something. It was a bit stronger than it was now at -5. I generally avoid 5 rated or currency pairs or assets with a score of 5 because it's a bit too close to neutral for me. Any sort of flipping data will immediately bring it back into a neutral zone. Max, hello. Price is different. Kindly, nice products. As for, I have no idea what you're talking about. What do you think about New Zealand US dollar? I think I'd like to say further downside. There's the side of me that is saying it could continue lower, but again, just with what's going on with the US right now, I don't have like a solid confidence in that. We'll see though. We've got the same entry on silver. Great minds think alike, wealth trader. Yeah, I think metals will. It's possible we'll continue to see them down, probably throughout the week. We might see a little bit of a pickup later into the week towards the rate decision, but we'll see. I'm not overly concerned. Again, I've got more than enough ready to start firing in some more long positions once we see lower prices coming into play. So that's completely fine. I'm also long Euro Swiss, short GU since last week, closed Euro CAD longs. Very nice sluggy. Rate cut's already priced in, but I think the dollar is still strong against other currencies. Yeah, well, yeah, I suppose. I'm not overly optimistic. Would you consider a re-entry on the S&P for festive season? Yes, that's what I was going to move on to, actually. I am considering probably not the S&P. I'd rather get into NASDAQ, which unfortunately I completely made. I kind of fumbled the bag on the S&P. Coulda, woulda, shoulda is how I'm feeling right now. So I think really the only thing I can do is wait for a pullback because obviously I can't enter right now. We've got this gap that is very, very likely to get filled. So I'd be looking for some sort of retracement back into these highs. It would come and fill in the fib zone between the 0.5 and 0.618. So it'd be a very nice sort of break and retest, buying into the trend on a pullback. That's kind of all I've got really for the NASDAQ. The Dow, China 50, they're all very, very similar in terms of price action. So that idea applies across the board. Resistance at 1.18 zone and euro dollar, somewhere around that maybe. Yeah, possibly. We'll see. So euro dollar is interesting because I showed this a couple of weeks ago and I'm still quite liking the idea, but we've still got the monthly price action that is quite convincing for lower prices sort of into 2026 or throughout 2026. So the previous monthly candle obviously attempted to break above, completely failed, so sellers stepping in. The current monthly candle is bearish, the trend is to the downside, and we've got this fib level here, so prices just rejected the 0.5 level. And again, this is obviously the monthly time frame, so this isn't a trade I'm really going to take, but it is something I'm sort of paying attention to. It could be, this trend has been established since 2018, so it's quite nice. So 1.2 in the grand scheme of things would be completely reasonable, and then maybe even some sort of short position into 1.2 or at 1.2 and above, sort of DCA style might be called for. Wealth trader is short euro dollar. I mean, that could work out as well. Euro Aussie. Long euro dollar, very nice. Jaylene, hello. So Euro Aussie. I don't know if I've really got anything specific for that one. Let's have a look. So I'm just checking the notes I've taken over the weekend. There really isn't that much going on whatsoever with the Aussie. So with oops, sorry, I was just rendering a video. I just heard my own voice coming through my ears. That was weird. So with Europe, we've got PMIs back above 50, fiscal support from Germany, and narrowing rate gap with the US. So the euro is relatively supported really across the board. The Aussie, again, I don't really have that much for the Aussie. So that leads me to kind of want to be a buyer, to be honest with you. Kind of just continue this trend to the upside, maybe buy if we can come back into these lows. That might be an idea. That would intersect our 200 moving average. It would create a triple bottom here. So technically it looks okay. But yeah, there isn't really much I've got on my mind here. If Aussie CPI beats expectations on Wednesday, Aussie yen could be a good risk on trade or carry. Yeah, could be. Sold euro pound to slightly hedge. Yeah, I mean, euro pound was on my watch list for a little while. It was on the Edge Finders a bearish reading, but I had a bit of an issue with the price developments because it's just sideways, really. Euro pound is a beautiful pair for mean reversions. So my idea is if you were going short euro pound, this is kind of the only level that there really is. But we are still in an uptrend. We've got overall a lot of indecision in terms of the direction here. So it's tricky. So yeah, I mean, the other side of that is the fundamentals. The UK, in my opinion, is very weak. I wouldn't want to be holding sterling in my portfolio, especially for a long period of time. And I do think the euro is relatively strong, especially compared to the pound or the sterling. Holding euro pound buys, lovely. That's what I like to hear. What about longs on GJ? I'm still quite bearish on GJ, to be honest. Even though I'm in a bit of drawdown, I'm sticking with the idea. I'm quite happy with it. I think that, again, the pound is not in a great place. So disinflation entrenched, fiscal tightening ahead, Bank of England expected to cut rates before the Fed. So the yen, we've got fiscal expansion weakens yen now. Bank of Japan normalization in 2026 drives long-term recovery. So although the pound yen is likely to stop me out, I'll be completely honest, I'm not overly optimistic on this position itself. However, the idea of lower prices on the pound yen, I think, is completely valid. So this trade might not be great right now, but if we can continue higher, I might try again later in the year towards the new year. US oil. Yeah, I mean, I don't really have anything on oil. I know there was the situation with the US and Russia regarding the oil, wasn't there? But I haven't really looked into it too much. I should have done, but I was very busy this weekend. Let me just check notes here. Oh yeah, here we go. So I've got oil bullish short term, US sanctions squeeze supply, inventories tight, liquidity easing lifts demand expectations. So overall, yeah, I mean, higher prices make a lot of sense, but I'm not. Oh wait, hold on. We do have a bullish reading on the Edge Finder. I didn't see that earlier. So fundamentally, seems quite bullish. Edge Finder is also given as a bullish reading, so I think the long position I've got marked out does make sense. However, I think this entry might be scrapped now because, you know, I think if we were going to revert 50%, it's likely to have already happened. So it seems like the outcome here is we're actually going to continue higher. We're going to have some sort of trend change here with the moving averages. Then I would be looking for some sort of pullback and then a continuation higher. Again, that's sort of just rough price action expectations, but that's if we do see that, then I might look for a long position. Although right now, I see pretty much nothing there. James, I was trading DAX 40 this morning. Could you please help me understand the data that came out this AM, German IFO business climate? Let me just double check. I wasn't watching Germany this morning. Let me check my calendar. Bear with me. Hold on, let me just read another message while I'm doing that. Hello, James. What's your take on Swiss yen? Swiss yen, same thing as pound yen, really. I think I think yen pairs, so pound yen, Swiss yen, dollar yen, very likely to continue slightly higher. But I wouldn't expect sustained buying pressure throughout 2026. Okay, so German IFO business climate came out at 88.4. Forecast was 87.8. Previous was 87. So hold on, sorry, I'm just reading that. So higher than forecast currency is bullish. We've obviously got equities down and not really any effect on gold. So yes, good for the currency, not great for the indice equity markets on the German news. So yes, the DAX would have taken a hit from that, I would assume. Okay, right, back to Swiss yen. Sorry, I was trying to do two things at once there. Swiss yen. So what we've got to think of with Swiss yen is why is this market bullish? Well, I don't think this is going to continue for a couple of reasons. We've got rate hike expectations, or the path to normalization was pretty much wiped out when we got the new PM in Japan. But that doesn't mean it's wiped out forever. It's expected that that's going to continue in 2026. We've also got the fact that if the BOJ is hiking rates and we've got the S&B sitting at neutral rates, then the yield gap is actually favoring shorts. So the carry trade idea, or the carry trade dynamic that was driving dollar yen, pound yen, all of the yen assets up, or yen pairs up, is actually reversed for this market. So in theory, we could actually see traders start taking opposite positions, benefiting from the carry trade to the downside. Now, I had that idea back in sort of February this year, and I was completely wrong. This market just continued much, much higher. My idea actually couldn't have been more wrong. So whether that happens or not, we will see. Okay, it seems like Marco's not going to make it on today. So you've got me and you stuck with me. Let me just check the timetable so I can understand the timeline we're working with here. 10 a.m. Okay, it's 3. Sweet. Okay. My idea was selling at the first 5-minute candle TP at gap fill. It worked, but I got confused about the data. Yeah, I mean, markets do typically fill gaps quite quickly, specifically on lower time frames. So high liquidity markets like FX markets, like majors, things like DAX, S&P, gaps on daily time frames, H4 time frames, like we've had on the yen pairs, like pound yen, dollar yen, are taking a little bit longer because that was obviously a more impactful event. There we go. That's what I was looking for. However, lower time frame gaps generally do get filled very quickly because the gap fill strategy is actually quite commonly used. Not really between institutes. It's not an institutional thing, I don't think, anyway. But I do know. So I was friends with a broker actually back at 8cap who basically just traded gap fills. So he would wait for some sort of news event, and he would just fade that move and take profit at the gap. Just got in stream. Did we go over euro dollar? We did go over euro dollar. Yeah, I'd rewind maybe 15 minutes. So right, let's just see if there's anything else on the watch list, and then I think we might call it a day. So I still quite like dollar CAD to the downside, potentially. So what we're seeing is a little bit of a fade here in the buying pressure. It looks like we're having a very controlled change of trend. Whether that's going to sustain, that's actually going to flip, we will see. But it would be lovely to see some sort of trend change with the moving averages. And then that would allow me to get into some sort of short position, looking for the take profit level down here at 1.37308, which would be just these previous lows. I think that's a very, very nice level to look to take profits if we can get into a short. However, as I've said multiple times, I'm not overly happy with taking dollar trades right now. Hi James, how's the super villain layer doing? It's very good. I've just filmed a new YouTube video, so I'm just sending that to I've hired an editor as well. I'm becoming a professional YouTuber, so I'm gonna send that to him today. So anyone that's subscribed to me, you'll have a video out later this week. You are more than welcome. Do you know how useless Fibonacci tool is in trading? It was originally created with a study with exponential growth of a rabbit population. Please stop with the hocus pocus technical analysis. I will do what makes me money. You can stick with your FVGs or whatever it is you do. James, do you close manually trades in profit if the fundamentals flip? Yeah, I'm not really a huge trade holder. So Nick and I trade in a very similar way in terms of the way to get into the market. We'll just look for technical levels, maybe line up with the fib or some averages, like moving averages, and then we'll take the trade with the Edge 500 fundamentals. Whereas Nick will trail stops and basically have no take profit, so he maximizes the move. I normally go for a 1 to 1.5, 1 to 2, and then I'll get out and reallocate somewhere else. So I don't normally do much to my trades once they're on. I'll normally just let them go. Maybe trail stops just to squeeze and protect the position, but yeah, that's about it. I will close trades manually as well now and again. So like the Nikkei trade, and the S&P trade's a better example, I suppose. The S&P was here, so I was long. I had maybe 5 or 6 long positions throughout all of this, and then we had CPI coming the next day. So I was like, you know what? I'm not going to have that much risk on the table, so I'd rather just close it, realize the profit. Obviously, in hindsight, probably not the best idea, but at the time that seemed like the best management approach I was willing to take. Wealth traders out of silver, unfortunate. Yeah, I think buying silver as a full position right now isn't the best idea. Again, the reason I'm buying silver is because I'm DCA trading. I'm quite happy to keep adding in because I'm very, very bullish on silver. I wouldn't be surprised if we end up seeing, towards 70 to 100 at some point in when I say near future, I mean sort of late 2026 maybe. But yeah, I'm willing to basically just keep adding. I might have to close positions as we go, bring down the average price, but either way. Anyway, ladies and gentlemen, I am going to head off for the day. I hope you all enjoy the rest of your days and weeks. I will see you. I think I'm on Wednesday. I don't know if I'm on tomorrow. I don't think I am. So guys, have a good one. Thank you for being here. Stay safe. Don't get margin called. And I'll speak to you very soon.
You've been watching A1 Trading Live. We're here Monday through Friday, where you can tune in to hear insights from professional traders from all over the world. Make sure to subscribe for future streams. And as a reminder, if you're looking to get access to free courses, prop firm discounts, and free trading tools, head over to a1trading.com. See you next time.